President Trump has officially nominated Kevin Warsh to take the throne at the Federal Reserve. And make no mistake, Warsh has a radically different vision for your money than the current chairman, Jerome Powell. Now you have to remember, the Federal Reserve is not federal. Even though the name says otherwise, President Trump cannot simply fire the chairman. He cannot order the Fed around. However, Powell's term expires in May, giving Trump the golden opportunity to install his own man, Kevin Warsh. So who is he? And what is the economic earthquake you can expect later in 2026? So who is he? And what is the economic earthquake you can expect later in 2026? Kevin Warsh isn't new to this game. He was in the trenches at the Federal Reserve during the 2008 crash, working under Ben Bernanke. Back then, Warsh was known as a hawk. He fought for higher interest rates. He was a fierce critic of money printing. He hated the idea of bailing out the economy with cheap cash. But today, his tune has completely changed. Now, Warsh argues that the Fed has kept interest rates way too high for way too long. He believes the Fed needs to cut rates, and cut them drastically. This is exactly what President Trump has been waiting for. Trump has made it clear he wants a chairman who aligns with his vision of aggressive rate cuts. He wants someone willing to break tradition and actually listen to the White House. This is critical because the Fed has always claimed to be an independent entity, making decisions without government interference. Trump is trying to shatter that wall. But here is the twist. Warsh claims that slashing interest rates won't trigger a new wave of inflation. How? By pulling a different lever, shrinking the Federal Reserve's balance sheet. This is the key difference, and it is the single most important thing happening in our economy right now. You need to understand this mechanism. Look at what happened between 2020 and 2022. The Fed turned on quantitative easing. That is just a fancy term for money printing. They created cash out of thin air and lent it to the U.S. government. The government wanted stimulus checks, funded, new military projects, funded, AI infrastructure, funded. Since the Fed doesn't actually sit on piles of cash, they simply added zeros to a digital system, printed the money, and handed it over. The government got to spend more, but no new wealth was created. The consequence was the brutal inflation we all felt. Kevin Warsh is proposing a different path. He says cutting interest rates usually drives prices up because people borrow and spend more. But if we cut rates while simultaneously sucking those printed dollars out of the economy by reducing the balance sheet, we can have cheaper loans without the inflation nightmare. We saw a glimpse of this in 2022. When inflation skyrocketed, the Fed started quantitative tightening. They raised rates and shrank the balance sheet to kill inflation. That lasted through 2023, 2024, and most of 2025. But on December 1st, 2025, the game changed. The Fed announced the end of quantitative tightening. Essentially, they fired up the money printer again. As we stand here in 2026, the Fed is growing its balance sheet once more. President Trump wants to reverse the rate dynamic. He wants cheaper mortgages. He wants cheaper car loans, but most importantly, he wants cheaper debt for the United States government. We are sitting on over $38 trillion in national debt. The government has to pay that back with interest. When rates are high, it's not just your mortgage that gets expensive. The government's interest bill explodes. That means your tax dollars aren't going to infrastructure, veterans, teachers, or healthcare. They are vanishing just to pay the interest on our credit card. Interest payments are now the fastest growing expense in the U.S. economy. Trump wants lower rates to stop this bleeding and free up spending power. But the risk is terrifying. If you cut rates, the government will likely just spend the savings, fueling the fire. That creates inflation. Warsh's strategy is the gamble. Aggressively lower rates, but aggressively shrink the supply of money to balance it out. Will it work? We will see. But for this to happen, Warsh needs the power. The Federal Reserve operates on votes. There are 12 voting members. To change the interest rate, you need a majority, 7 votes. Here is the irony. Jerome Powell was originally appointed by Trump in 2017, but by 2018, Trump was already furious with him. Now, in 2026, the gloves are off. Trump has appointed 4 of the current members, but Powell refused to bend. By replacing Powell with Warsh, Trump hopes to finally secure a loyal bloc that can sway the vote, slash rates, and shrink the balance sheet. Why does this matter to you right now? Because the markets hate uncertainty. When Trump made this announcement, we saw immediate volatility. The stock market took a hit because investors don't know what to expect. Stocks run on supply and demand. When money is cheap to borrow, institutions borrow millions and dump it into the stock market, driving prices up. Trump is betting that lower rates will boost the stock market, make housing affordable again, dropping mortgages from 6.5% to maybe 5%, and help the government manage its massive debt load. But the fear remains, will this reignite inflation? We know cutting rates is inflationary. We know shrinking the balance sheet combats inflation. Will they cancel each other out? That depends entirely on how aggressive Warsh is willing to be. This will impact the value of your dollar, it will impact the global economy, and if you have money in a savings account or CD, prepare yourself. When rates get cut, the interest you earn on your savings is going to drop. You need to pay attention. If you are an investor or you want to become one, you need to know how to navigate this shift. I have put together a brand new free investing masterclass where I walk you through exactly how to get started and how to find hidden opportunities before the crowd does. I show you the exact framework my firm uses to research these deals. It is completely free, and when you register, you also get access to Market Briefs, my daily newsletter for investors. The link is right down in the description below. And if you got value out of this video, the best thank you is a referral. Please share this video with a friend, a family member, or a fellow investor. Let's spread this financial education together. Thank you.